Hey friends, Greg here. So, if you are a wealth builder that makes money through tips or overtime, you might have heard about the bill that was passed in Congress on July 4th that provides tax deductions for tips and overtime. So, in this video, I'm going to break down exactly what changed and what the impact could be for you because there's a lot of misconceptions about what it does or doesn't do. I actually built a free tool that is going to compare what your taxes would have been in the prior model to what they will be going forward because I was surprised at how big of a benefit it made for some people and then at the same time how little impact it has for others. So here are the two things that you need to know that I'll walk through in the video. First is just what changed, and then in the second part I'm going to go through some examples of how big of a difference it may make in your tax situation. Now, I did add a disclaimer at the bottom here. I do want to call this out. So, I am not your tax professional. And so you always want to have your own situation analyzed by a professional. There are plenty of other considerations that may impact your final tax bill, whether you're filing jointly with a spouse or you're single or you have kids, all sorts of stuff that goes into this. And so I'm only going to be looking at this specific change and what that would mean if someone only had these types of exemptions on their tax bill. So the first thing it changed is you are now able to exclude the first $25,000 you make in tips from your annual taxes. You are also able to exclude the first $12,500 of overtime that you have. Now keep in mind that this amount of money is only for the portion of time worked above 40 hours in a week, and then it only starts adding towards this allowance for any of the rate that you earn above your basic rate. So, quick example, let's say you make $10 an hour for easy math and you now are paid $15 an hour, so time and a half. You would only start calculating the half amount, so the $5 over your $10 rate towards this $12,500. Now, the next thing that changed is the standard deduction did increase. It increased to $15,750. Basically, what this allows you to do is whatever your income is for a year, you get to deduct $15,750 before the government calculates how much tax you pay. So let's say you make $50,000, you would take $15,750 off of that. And then that's the amount that tax would be calculated on. So the fact that it went up for next year just means that you will pay a little less tax than you normally would because your income that the government's going to look at has went down. Now, the income caps for these allowances are pretty generous. So what this means is that your income, you could earn up to $150,000 in a year before the government starts phasing out the benefit for tips or overtime. So as long as you don't make $150,000 or more, you can still claim these on your taxes. And if you do make over $150,000, it's going to start reducing the benefit by $100 for every $1,000 over the limit that you make. So even the phase out is pretty generous in my opinion. Now, one thing I want to call out because there's a lot of confusion around this next point. You can claim the standard deduction and your tips and overtime allowance to calculate your taxable income, which is the amount that would be taxed from the federal government. There's a bit of misunderstanding around what this bill does. I'm seeing some news out there that's saying you can only claim the standard deduction, which is the $15,000. You can't claim tips on top of it, but you actually can when it comes to calculating taxable income. And I'll show you how that works when we get into the tool. Okay, so what are some drawbacks? So it's not permanent. So these tax benefits are only until 2028. So there's 3 years in which you can claim these. And not getting too off topic, but there were other permanent tax breaks added in, things from estate tax planning. So if you have a $15 million estate and you pass away, you can pass $15 million on tax free. That those were set to expire this year. Those got extended permanently. Of course, there were tax breaks for higher income levels that were set to expire that became permanent. And so I think the bigger issue with this for me is that a lot of the tax breaks that were given to people that make more money. And then the tax breaks that did happen for people that could really benefit from it, they're not permanent. So hopefully in 2028, there's a decision to extend these tax credits or help with tax credits for lower income people. We'll see how that goes. Okay, so there's some other little nuances, but There is a requirement around qualified overtime, so you have to work more than 40 hours in a week. So it's really just looking at the hours over and above a normal hourly work week. The second part is that there are qualified industries for tips. And so this makes sense to me because if you're the IRS, is now suddenly everybody starts working for tips, and the first $25,000 of all income that anyone makes is tips, and that just becomes a loophole. So what they're looking at are what are the qualified industries where in the normal course of business you receive tips. So, an easy example could be a waiter or some type of wait staff that receives tips, baristas, anywhere where you get tips today and doing normal course of business is eligible. There's some other limitations around tips for financial services, but for the most part, there's qualified industries. The IRS is going to release guidance over the next 90 days around what industries those are. But from what I've seen, it's pretty reasonable. Then the last two things I want to call out just to be aware of on this is one, this only applies to the federal income tax you pay. So it doesn't apply to state tax and it doesn't apply to payroll tax that you pay on every paycheck. So you pay Medicare and Social Security tax, those are still going to apply. And then the last kind of con is just to be aware of this nuance. According to a study at Yale, 37% of all tipped workers actually pay no federal tax already. And I'm going to get into why that is because basically what happens is if you have a very low income, you're working in college or something, the standard deduction that you take, this $15,750, if you only earn $15,000 in a year, you're going to pay close to nothing when it comes to your federal income tax. Okay, so let's walk through a quick example to kind of help bring this to life. So, your new taxable income. Let's say you earn $50,000 a year just for easy round numbers. So first, we're going to reduce that income by the standard deduction, which was the amount that was updated to $15,750. So your new taxable income at this point would be $34,250. Now, the deduction for overtime and tips would apply on top of this. So let's say, hypothetically, in a best case scenario, $50,000 of this income, all the way up here, was from tips. So you're going to max out the deduction that you're allowed to take. So we would reduce the $34,250 in new income by another $25,000. And so what you would be left with is the taxable income of $8,250, which you would pay tax on. And ultimately, you would pay 10% on the $8,250 of taxable income that the government would look at. You're only going to pay $825. Now, keep in mind, this doesn't include all sorts of other credits and assumptions. So, there's child tax credits, there's earned income credits. There are all sorts of things that would reduce this amount, most likely to zero. But this is just a quick example. Okay, so now we are in my tool that's going to look at some different benefits. And if you want to get this, it's on my website. I'll have a link to it in the description below. And if you want to make your own copy to edit and kind of see your own situation, just click file and make a copy. So don't try to request edit access because I can't give that because that's for the main copy that everybody sees. So again, just file, make a copy if you want to do this for yourself. So just to walk you through this tool, it's actually a pretty advanced tool. I kind of nerded out over the weekend. It's going to calculate your marginal tax rate, which is that tax rate on the last dollar that you earn. So at the highest level, it'll calculate the effective tax rate, so the percentage at each bracket of tax to get to a total dollar amount owed. And then I added some other math here that's just going to compare what you would have paid before this bill went into place. So you can kind of see if it's saving you any money or not based on your own situation. So let me go through some examples. So let's just max it out. So let's say you earn $140,000 a year. $25,000 of that comes from tips, and 12,500 of that comes from overtime. This is really kind of at the max of what this bill could do for you. And I kind of have a hard time thinking of someone that earns that much in tips and that much in overtime while still earning that salary. But it's just a hypothetical. So if we did that, your $140,000 salary, it's going to reduce down to $102,000. We're going to also then take the standard deduction, which is another almost $16,000. So your taxable income drops down to $86,750. So if I scroll through here, what it's going to show is that your new marginal tax rate, it's still 22%, which is that the tax rate for the highest dollar earned. But your effective tax rate is going to drop down to 16%. And the total tax you would have due is $13,999. But if you compare that to what it was before, you have almost $9,000 worth of savings from this change. Keep in mind, again, this is just in a vacuum. Let's pick something more realistic. I don't know, maybe you're a nurse and you make $80,000 a year and you work a lot of hours, so you max out your overtime. In this example, your $80,000, you would reduce it by the amount of money you made in overtime at 12,500. We would take the standard deduction again. So this would basically drop your taxes owed from what was before $9,302 down to $6,000, just roughly. So the savings from the bill in this example is about $3,000. Going back to an example where maybe your income is not as high, let's say it's $20,000. Let's say you're a waiter and almost all of that annual earnings comes from tips. Let's say $18,000. What it's going to do is it's going to reduce your annual earnings down to 2,000. But here's kind of the disadvantage at a lower income level. You were already going to get a $15,750 deduction off of your earnings with a standard deduction. So ultimately, in this new framework, your taxable income is going to be zero. So you're not going to pay any federal income tax. But if we look at what this bill would have done before this went into place, you would have only had $540 because the standard deduction already took so much of that income away. And again, when you're at this income level, there's other deductions that you can claim. So at this level where you may already be paying little or no income tax at the federal level, this is not going to do a lot for those people. And so again, that's the 37% of people that Yale quoted that are already in this bucket. And like I said before, you still pay Medicare, you still pay Social Security tax. If you're in a state that has any type of state tax, you're still going to pay that. But if you want to get in here and play around with just your own numbers, again, just make sure you hit file, make a copy, just add your earnings in here. You can add tips and overtime, and you can play around with the impacts based on the new bill. So I hope this has helped answer your questions. If you have questions about the bill specific to tips or overtime, please feel free to leave a question or a comment. I'm happy to respond to them. I did see over the weekend there are just so many different questions and misinterpretations of how this works. And at the end here, I'd offer a plug for my website. So in my last video I shared, I'm going to be launching my first kind of business offering. It's going to be a group coaching session, and I'm going to take you through a complete wealth building system that I built that's really reflective of the last 15 years of my own wealth building experience. I haven't decided on how many weeks it's going to be. It'll either be 4 to 6 weeks, about an hour a week. We'll meet on Zoom. We'll have a team chat. So that will be led by me live. So it's a great opportunity if you have questions about how to build wealth, you have questions about debt, how to manage cash flow, investing, all of that. I'm going to have a curriculum that I'll build for this first group to kind of help give me feedback on so that you can help shape the future of what I'd like to be able to offer more broadly. So if you're interested in that, sign up for my newsletter on my website. I'll be releasing information on my website in the next couple of weeks. And I will be locking this to 25 people. So I hope to see you there if you're interested in it. Finally, if you are looking to kind of start to understand how to build wealth, I'll link you to one of my latest videos that talks about how to build a money vision. And taxes are really connected with the money vision because the goal is you want to pay as little tax as possible so that you can start investing and building wealth for yourself.